Welcome to Wealth Wisdom Podcast. I'm your host, John Lawson, Senior Wealth Advisor at Asante Wealth Management and Sana Family Office. We are always looking for unique ways to educate our client families and be introduced to new clients. At Sana Family Office, we help business owners and affluent families navigate the complexities of wealth through a variety of wealth management and family enterprise oversight services. So today on Wealth Wisdom, I'm excited to speak with Jeff Chan, who is a senior analyst for responsible investing at CI Investments. As the firm's ESG subject matter expert, he's responsible for working with CI's portfolio management teams to integrate ESG factors into the investment decision-making process and to identify material ESG risks and opportunities across portfolios. In his role, Jeff also contributes to the overall advancement of responsible investment at CI, including through product development and briefing company leadership on industry trends. In addition, Jeff holds dual responsibility for advancing corporate responsibility at CI Financial, the parent company of CI Investments. Prior to his role at CI, Jeff held positions with Advisory Services Group at Sustain Analytics and the Corporate Sustainability Group at RBC. Jeff holds a Bachelor of Science in Life Sciences from McMaster University and a Master of Science in Sustainability Management from the University of Toronto. Jeff is also fluent in French, but because I am not, this will just be done in English. So welcome to our Wealth Wisdom Podcast, Jeff. Let's start out of the gates. Straightforward question. What is ESG and how has it evolved?
Sure. Well, first of all, thanks, John, for having me on. Pleasure to be here. So ESG, the acronym stands for Environmental, Social, and Governance. And really, when you think about ESG, it's bringing in additional factors that are under the environmental, social, and governance lens into the investment process. So really how that's evolved over time, it really started with exclusions. So, picking different industries that you maybe don't like or it doesn't align with your values and just excluding them from the investable universe. That's evolved since that time to something that's a little bit more complex, little bit more robust in that you're actually looking at environmental, social, and governance factors alongside traditional financial factors, essentially to build a more holistic perspective of a company that you're investing in, which is important, right? Because more and more, the value of companies is intangible. So those types of aspects that really contribute towards company performance don't always show up in a balance sheet or an income statement. And so taking into consideration ESG factors, more and more important nowadays than perhaps ever before. And on the far end of the spectrum as well, you have impact investing, thematic investing, where you pick specific themes to invest in, environmental and social themes, for example, or you're investing in environmental and social areas that specifically are targeting positive impact for the environment and society.
Wow. Yeah. So it's a huge spectrum. It's come a long ways. And really this, I think, answers my next question, but I do get this from clients is this just kind of a fad or is it really here to stay and continue evolving?
Yeah, I get that question a lot as well, John. And so it's here to stay. I mean, if you just look at, this concept of sustainability, right? So you strip out the investment side of it for a second. You just take a look at some of the things that have been around for a long time, like energy efficiency, recycling, and then now in more recent examples, you see, meteoric rise of EVs, you see renewables, you see, countries and cities setting net zero targets. This is really becoming something that's ingrained in our behavior and ingrained in the way that we actually operate in society and will operate going forward. And if you just look at consumers as well, consumers have a less tolerance today for irresponsible behavior. I think consumers are also willing to select brands and pay a premium perhaps for those brands who are more environmentally conscious, more socially conscious. And then the third thing I'll say is, if you think about the major ESG issues, like climate change is a great example of this. It wasn't too long ago where climate change was really something that people talked about, but it wasn't really something that we felt in our day to day. And I'm sure I can agree that as humans, until we actually feel something impacting us, we don't always believe that it's true. But if you just look at severe weather, the frequency of bad storms, of tropical storms, hurricanes, tornadoes, and the intensity of those things, we're starting to feel like. I was just talking to my mother the other day, and I'm from Richmond Hill, just north of the city of Toronto, and there was a tornado that touched down not too far from my parents' house, and my mom said to me, "Oh my God. That's crazy. This tornado touched down like 30 minutes away from our home. And this climate change thing you've been talking to me about for years is actually real." And my mother is not even, she's not, she's not, certainly not anti ESG, but she's not a pro ESG person either. And so the fact that, I'm having more and more conversations like that with people like my mother really suggests to me that we're actually seeing the impacts, we're feeling it. And once we feel it, it becomes real. So without a doubt, it's here to stay.
Yeah, and you talk about that example with your mom and their tornado here in BC. We really feel it where the province is just ablaze. We've had a summer like no other, where we've had a little bit of rain in there, but essentially since June, it hasn't really rained, and we've gone through some extreme heat to just heat. And that's not normal. Normally we have the people call us the wet coast as opposed to the West Coast. So we've had good summers before, but it's just we seem to be seeing this trend. So totally understand. I think more and more people are feeling it, so they are believing in it a little bit more.
Yeah, absolutely.
So again, if we kind of go back, I'm as I alluded to off air with you, I'm a little older than you, but when this first kind of hit my radar, it was referred to as ethical investing, and it was kind of a brand name and a marketing side. What's the difference now, or is there a difference?
Yeah, so there is absolutely a difference in what they technically are. I would say that even still, though, the terminology sort of gets jumbled a little bit depending who you talk to. This concept of ESG investing, you can call it ethical investing, impact investing, ESG investing. It just depends who you talk to, but there are some nuances. So I mentioned this earlier when I talked about the evolution of ESG, but ethical investing, I would say, really is the roots of what we know today as the broader concept of ESG investing, also known as, you can also consider ethical investing to be socially responsible investing, or SRI. And this is where, again, would exclude industries or companies that perhaps don't align with your values. But again, like I said before, that's evolved into a broader concept around, considering, more qualitative environmental and social aspects in the investment process. Now, it's important to make that distinction between ethical investing, or SRI, and broader ESG investing, because I believe that that's really where some of that myth around ESG investing detracting from financial returns comes from. Because if you really think about it, when you think about just the basics of portfolio construction and the need for diversification and the desire to reduce portfolio volatility, diversification is important. And so if you're just excluding industries right off the bat, from your investable universe, theoretically, you could impact your ability to manage portfolio volatility and reduce diversification, and therefore you're impacting portfolio risk and return profiles. But today, what ESG investing is, it's not excluding things from the investable universe. Nobody's saying you can't invest in X, Y, Z. It's saying, well, hold on a second. If we're looking at a given sector, a given company, let's look beyond just what we see in the financial statements to try and become better investors, right? To drive better outcomes for clients, drive better returns for portfolios. And so that's really what I would say the difference is today. And it's an important distinction to make.
Yeah, that's thanks for touching on that, because it was one of the areas that I had a question about in terms of, do you give up return if you are being responsible in this manner, or if you have these values and this belief? Some people do believe that, well, I can't invest in some things then, and that's true, but does it really impact? And so what you're saying is it doesn't have to. It's a lens through which we look through when we're making investment decisions.
Yep, exactly. And if you look historically at fund returns, index returns, you'll see that funds that are adopting an ESG investing strategy, so looking at ESG factors as part of the investment process, they perform just as well, if not better, over the long term. And if you really think about it, I actually think that there's potential to outperform as well in the future, because when maybe this is a little too simple a way of thinking about the stock market, but it's a supply and demand. So if and that's really driven by sales at the end of the day. And so if consumers are shifting their consumption behaviors to buy products and services from companies who are more environmentally conscious, are better performers when it comes to ESG factors, you could potentially see the stock price go up, and investors willing to pay premium for those companies, because at the end of the day, like, supply and demand for their products is driving the company's success, and that sort of translates over to the investment side. So I'm not saying that happens all the time, but in theory, you could see that moving forward, especially as the concept of ESG just becomes more prevalent over time.
Yeah. Yep. And that's interesting you touch on that. I've seen that playing out. So great point. And so that kind of brings me to our company, CI Investments. What does it mean to our clients that we're signatories to the UN Principle of Responsible Investing, and also being a member of the Responsible Investment Association? Does that really mean anything to them?
Yeah, I mean, certainly. What I would say is the UNPRI is the global body for ESG investing, and so any firm who has some degree of commitment to ESG investing and implementing that practice into their own into their business, usually are signatories to the UNPRI. Now, over time, this is just my personal opinion, but the value of the PRI has maybe diminished a little bit, because there's just so many companies signing on, and really, if you look at the reporting framework, it almost becomes kind of like a tick box. So I wouldn't say that just because you're a UNPRI signatory, it means that you're super committed to this stuff. I think at the end of the day, it's really, what are you doing in your investment processes? What types of solutions you're offering your clients? But absolutely, the PRI is sort of a baseline thing that you can look at to say, okay, at least I can feel confident that this firm has at least thought about being committed to this. The RIA is a little bit of a different organization. It's really an education advocacy kind of industry group. And I would say that, being a part of the RIA is significant for a few different reasons. So the first reason is that, the RIA is really an essential component of driving the ESG investment industry forward. And so, having the backing of firms like CI enables them to do that. So by being a member, we are contributing to that organization, being able to advocate for change. The second thing is from a firm perspective, it does provide a lot of really good educational resources for us as a firm that we can, whether it's engaging with our peers, engaging on specific topics to try and drive change in the industry, or simply just going to a conference, going to a knowledge session, and just seeing what advisors are saying. What are clients saying? What are our peers doing? What's industry best practice globally? And how can we take that and translate that into our own business so that we can add value ultimately for our funds and for our clients?
So then really to summarize my understanding of what you said, the UN PRI was more of an initial catalyst to help coax investment firms around the world to adhere to a certain criteria. And the RIA now is more that educational body that helps the sharing of ideas and pushing the movement forward.
That's correct.
Yeah.
Yeah, I mean, RIA is Canadian as well, so it's very focused on Canada. UNPRI is global, of course, and I mean, I know that I said the UNPRI, maybe it's not as much of a quote unquote hot thing than it used to be when it first came out, but nonetheless, like as a firm, like we still get asked by clients, are you a signatory? I mean, it's almost, you can think of it like a bare minimum for doing business, to be qualified to do business, particularly on the institutional side. But the way that things are moving, it's less and less about, okay, are you a signatory or not? It's like, well, what are you doing? Show me what you're doing, and how is what you're doing adding value? That's really what it's all about today. It's more very outcomes driven versus process oriented, like it maybe used to be.
Okay. And so that kind of leads me into CI, and obviously this is a strong value that they have to be very ESG conscious and move that direction. So what are the core components of that value, and what's our process for adhering to this?
Yeah, so there's a couple of different levers through which we sort of live this ESG narrative, if you will. So first off, at the investment level, so I sit on the investment team. Now the integrated CI Global Asset Management team that we just amalgamated late last year. So I sit on that team, and really how we do it is that we look at a couple things. So we do portfolio reviews where we look at we set thresholds for we call them ESG risk thresholds. So that looks at how companies are performing relative to their peers. Has this company been involved in any significant egregious events? So think like, the Facebook data breach, the Equifax data breach, the Wells Fargo fake accounts, those types of things. And then the other thing we do, which is, more proactive, because I mean, the portfolio reviews are kind of reactive, if you ask me, because it's sort of after the fact, after you invested. But more proactively, it's looking at identifying material ESG factors for the different companies and the different sectors we invest. And then we identify those for what we deem to be material securities. So it's either we already hold the security in a large proportion of the portfolio, or it's reached a certain level in terms of the research process pre-investment, because with resources being limited, there's not always an opportunity to look at every single security that we possibly invest in, but we identify the most material ones and the ones that we put the largest positions in. Mind you, that's evolving over time, but we'll identify material ESG factors for those securities and sectors, and we'll do a deep dive. So I'll go and I'll do a deep dive leveraging, industry frameworks, my own knowledge, company disclosures, to really build almost like, you can think of it like a company brief for the portfolio managers and the analysts to sort of incorporate that into their research that they're doing on that company. And I just want to pause there and talk about material ESG factors and the idea of materiality and why that's important. There have been a lot of studies out there that have shown that if a company focuses on material ESG factors, they tend to outperform their peers, versus if the company just simply tries to do everything under the sun related to ESG, they actually may underperform. So as investors, it's really important for us to understand and to be comfortable with what we feel is material, so that we can use that information to add value, performance-wise, and generate some alpha for our clients. So that's on the portfolio management day-to-day side. The second lever I want to talk about is product. So this process that I just described, that sort of applies to the in-house managed funds. They're not ESG branded funds. They're not dedicated ESG mandates. But when I say product, I specifically mean ESG solutions. So ones where ESG comprises a very prominent aspect of the investment process. It's not just something that we look at side by side. It's actually a fundamental component of the decision-making process. So we've been busy. We launched the CI ESG Impact Fund a few years ago. And then we recently launched a number of funds that I'm sure we'll get into later in the conversation to support our clients in achieving their ESG investment objectives. And then the third lever that I want to talk about is education and engagement. And education and engagement sort of spans different levels. So there's one component where we engage with company management, of course, to communicate what we think as investors, what we want to see, and we try to add value to company management. We try to get value from those conversations as well, so we can understand better what they're doing from an ESG performance perspective. And then there's education for our clients, for our advisors, for our sales team, and just internally as a firm, because there is an educational gap that exists in the market today. Like I'm sure you've experienced it, John, where clients may come in and they're very interested in ESG investing, but they don't know exactly where to start or exactly what everything means. And so the onus falls on yourself to educate your clients, but then you can only do that if you yourself are educated about it. And so there's this whole lever of education that we need to tackle, because it's one thing for us to manufacture solutions for our clients, but if they don't know what they're buying, and the people that are selling those products don't know what they're selling, then it really limits your ability to actually add value. And so those are the three levers that we look to tackle when it comes to ESG investing for our clients and for our process.
Oh boy, Jeff, you just I'm scrambling how to tackle this now, because you nailed a bunch of points that I just wanted to touch upon. So I just want to maybe clarify and touch back on a couple things that you said there. So let's talk. You made mention there of the education and with companies that you're curious and or thinking about investing with or are currently invested. So one of my questions was, how do you help them improve their ESG? Do you use the power of vote for the shares that we hold, or is it simply a conversation? Is it a combination of a number of things? I'm curious how that works.
Yeah, sure. So overall, I would say our approach to engaging with companies is evolving, as we speak, but it's a little bit of both the voting side and the conversations. I'm more involved on the conversation side than I am on the voting side. Our general voting policy is that, we vote in the best interest of the funds. ESG considerations are definitely part of that thinking and that conversation, because, if there's an ESG related shareholder resolution that, we feel the company really needs to address, then we'll of course support that. Right. But that's really more on the, the onus of the portfolio manager to exercise that vote versus somebody like myself. But really where I'm more involved is in the conversation. And so in my experience, I find that companies, they get a lot of value in hearing from their investors. And that's not just ESG, but for anything. So ESG included in that, of course. And so what I found is that companies don't always know where to prioritize, and they don't always know where to allocate capital when it comes to ESG initiatives. And so ultimately, they want to hear from their investors where do you want to see me allocate my capital? Where do you want to see me invest in? Because ultimately, I want to make sure that you're still willing to give me capital, right, to do these initiatives. And so when we have these conversations, it's nothing like do this or else. There's no ultimatums involved. It's really just meant to be a constructive conversation, saying, look, really appreciate all the disclosure you're currently providing, but really would love to see more of this, less of that, or I'd like to see you add this because we think it's important. And I'll do this in collaboration with the investment team. Oftentimes, they'll be there as well. We'll do due diligence beforehand as well, just to make sure we're on the same page, and to make sure that, again, linking you back to materiality, we're making sure that we're engaging with those companies on what we feel to be material. And if we do that, and we do that effectively, not only does it add value for the company because they're hearing something thoughtful from their investors, but for us, if we think it's material, then it could have an impact on our investment decision.
Yeah, that's fantastic. Thanks for walking us through that. And again, more of a curiosity question. Has it ever come to a point, and I know you said it's not, you don't try and ever use it as a threat, but have you seen the situation where a company's just going the wrong way, and so we divest of that investment because it's just not following our core beliefs and going the right direction?
Yeah, it's a good question. I mean, our policy generally is to engage before we divest. Like divesting would be the absolute last resort. That being said, I know that we have in the past perhaps adjusted our positions in the portfolios. Obviously, can't speak to that in great detail, but I know that we've adjusted it due to ESG considerations. So whether that being, we talked to the company, or we saw something that we didn't like, from the ESG data that we subscribe to, we looked into it and then maybe decided to adjust the positioning in the portfolio. I can't think of a specific example where it's come to divesting because of ESG considerations specifically. Of course, divesting occurs, normally, but I don't know of any case where, we talked to a company or we saw something that we really, really just didn't like or didn't agree with, and so we had to sell the stock. Don't know of an instance there.
Yeah, and as you had said before, they tend to be very responsive to feedback because they do want the capital from the investors, and they do want to do the right things. And again, to your point, they sometimes just don't understand what they need to prioritize, so they appreciate that and they'll respond. So
I mean, if I could just come back to maybe the divesting that concept, because I think it's really important. I think, it's really easy to say, I don't like this company, so I'm going to sell the stock, or it's a dirty company, so I'm going to sell the stock. Again, personal opinion here, but I don't agree with that way of thinking, because, companies require capital to make changes. And sure, the industry they operate in might be considered to be dirty or harmful at the moment, but if they're really sincerely trying to make an effort to make a change, they need capital to do that. Selling the stock, it's not really gonna do anything. You lose your ability to talk with the company, to hold the company accountable. And the other thing is, if everybody sells, the stocks of quote unquote dirty companies, that company still exists. And so perhaps the stock will trade at a discount, and somebody who, doesn't really care as much about progress for that company will pick it up for the cheap. And, the world ultimately doesn't get any better. And the company doesn't get the capital they need. And, it's not just clean tech companies or environmental companies who need the capital. I often say, the dirtier companies also need some love as well, if they want to move forward. So I think it's that whole concept around divesting immediately is maybe not quite the way to go when you're really trying to consider what ESG investing is at the core.
Yeah, Jeff, that's a fantastic point. you're better to stay in the game and have the influence and direct it to the right way, as opposed to turning your back on them and leaving them to their ways because they get desperate and continue to do the things that maybe produce dollars now, but aren't helpful in the long run. So great explanation. Just wanted to come back to your comment on CI's approach with ESG. And so what I heard you say, and what I believe I know, is that there's really two levels. One is broad-based application of ESG principles across everything that we do. So in essence, if you were saying it, you can say ESG is woven into the fabric and the process of what we do with each and every fund, each and every investment decision. But then on top of that, if you really want to drill down and be very specific on ESG driven investments, and that's the main factor, then there's specialty investment pools for that. Is that what you're saying? And
correct. Yeah. So, ESG, is applied more broadly at the firm, to varying degrees, right? Depending on, the asset class, the market, the sector, even at the individual portfolio managers, everybody wants to implement in their own way. Yeah. But when it comes to specific solutions, John, you're absolutely correct. CI has a number of dedicated ESG strategies where ESG is the focus of the strategy, and not just sort of something that's done in conjunction with an existing process. And so maybe it's a good time to just maybe get into some of those solutions now. Yeah. So as I mentioned, a couple of years ago, we launched the CI MSCI World ESG Impact Fund. It's an ETF and a fund. So that strategy is an impact investing strategy. So it invests across 11 different environmental and social areas. So like clean water, renewable energy, education, nutrition, really investing in companies that are, whether it's through products or services that they provide to the marketplace, are having a positive impact on some environmental or social theme, which is one or more of the 11 that I mentioned. Yeah. That fund also does not invest in fossil fuel companies. So it's ex-fossil fuels, so no oil and gas producing companies in that portfolio. It has a number of other revenue-based exclusions based on MSCI's screening methodology around alcohol, tobacco, gambling, weapons, and so on and so forth. Yeah. We recently just launched a number of new strategies over the last 3 weeks. We launched these strategies. So the first one we launched was the CI Global Climate Leaders Fund. It's managed by Monroe Partners. And that one really it's a thematic fund, first of all, and it seeks to invest in companies who are positioned to contribute towards the transition to a lower carbon economy in a net zero world, and along the same lines, benefit financially from that transition because of their business lines. So it's things like renewable energy, clean technology, energy efficiency. So it's a global equity fund. We're really excited about that one. Climate's such a big theme, and so we really wanted to have something in that area, and we feel that Monroe is excellent position to manage that, given their ongoing interest for quite some time now around climate change. And then the third solution that we launched 3 ESG mosaic portfolios. So we have a balanced income portfolio, a balanced neutral portfolio, and a balanced growth portfolio. And so that one really, the purpose of those solutions is to provide our clients with these, what I call core ESG solutions. So nothing too complex by way of specific thematics or impact investing or exclusions, but really it's meant to be like, if you're interested in ESG but you're not really sure where to start, you want to allocate some money to something that's you can have confidence that is more ESG conscious than a competing fund out there, that's the one for you. It essentially adopts the existing Mosaic platform model where we hold a number of ETFs in the portfolio. And those ETFs are, of course, ESG ETFs, including our global climate ETF, as well as the World ESG Impact ETF, amongst other third-party ETFs as well.
Wonderful, thanks, Jeff. I'll touch on a last point that you had made earlier in that barrage of points that I'm scrambling to remember. Wanted to touch back on, but that was just knowledge and education, You made the point that if sometimes clients don't know what they're investing in, but also times advisors don't know what they're investing in, and so that really comes back to the whole reason for the podcast, and that is to help create awareness and knowledge, and maybe tweak somebody's curiosity just enough so that they ask the question. And for myself, I love doing these podcasts because no matter how much I research or know about the subject, I always learn something. So it's been fabulous having you on. I really appreciate you taking the time, and on behalf of myself and my clients, and those others that listen out there, very much appreciate it. Thank you.
Yeah, thanks, John. It was a pleasure. Great to talk to you, and thanks again for having me on.
A big thank you again to Jeff Chan for being our guest today on the Wealth Wisdom Podcast. I think you'll agree Jeff's passion for his work shows through in the conversation we had. And I'm privileged to have the ability to reach out to him and his team for any help our clients need in this area. If you have questions or would like information on how we implement our strong belief of embedding ESG lens into our decision-making process, please reach out and we're happy to help. On our next episode of Wealth Wisdom, I'll be speaking with my partner, Josh Dick, about the 5 key stress points that people who are referred to us tend to have and how we help with that. Our goal is to educate and engage you. If you have any topics you would like us to dive deeper into, please let us know. This feedback and you giving us a review would be very much appreciated. For those of you who don't know the origin of the name Sana Family Office, it stems from the meaning of asante, which is Swahili for thank you. However, the most commonly spoken phrase in Swahili regarding asante is asante sana, which means thank you very much. This name represents our gratitude towards all of the families and business owners who have chosen our team as their trusted advisory council. Until next time, asante sana.
Hi, I'm Trevor Beggs from Sana Family Office, and thanks for listening to John Lawson and the Wealth Wisdom Podcast. Here are the necessary disclosures. Asante Capital Management is a member of the Canadian Investor Protection Fund and Investment Industry Regulatory Organization of Canada. This material is provided for general information and is subject to change without notice. Every effort has been made to compile this material from reliable sources. However, no warranty can be made as to its accuracy or completeness. Before acting on any of the above, please make sure to see a professional advisor for individual financial advice based on your personal circumstances. The opinions expressed here are not necessarily those of Asante Capital Management. Thanks again for listening, and we'll catch you next time on the Wealth Wisdom Podcast.